Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, July 26th, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in a correction, a bifurcated correction. If you only own small caps, you're probably pretty happy with what's going on. But then again, if you only own small caps, you were probably pretty disappointed with what was going on until about 2 weeks ago. So really, the correction is focused on big tech and growth stocks of all sizes, while there's been a rotation into small, medium cap stocks and also large cap value. You know this if you follow us or watch any of our videos. Let's check the trend gauge over here. Market leaders. We went to bearish downtrend a week ago as leaders really came apart and continue to not make much progress. There's one here and there, but we don't want to try to pick a needle in a haystack. We want the wind firmly at our back, and growth leaders of all shapes and sizes headed to the upside as part of a bull market. Short term, we are also showing the red arrow, small mid cap, bucking that trend. It's the S&P and the Nasdaq 100 below the 21-day moving average, but the way we weight the five indexes results in a red arrow here. Medium term, we've got the Nasdaq 100 below the 50-day. The S&P 500 regained the 50-day today, so spent 1 day for sure, and 1 day just a 0.1% below the 50-day. That's enough to keep the arrow on green with a little yellow sub-arrow warning. Long term, all five of the major indexes are above the 200-day moving average. And as you know, and as we speak all the time, the market never gets into serious trouble, broadly speaking, if the major indexes stay above their 200-day moving average. Of course, if you own individual names, they can get taken apart for various reasons, depending on what's in favor or out of favor with the market. So what happened today? Overnight, for no apparent reason, a strong rally. The PCE inflation data came out, and it was pretty much in line. We gapped up at the open, tried to sell it off a couple times, but weak attempts to sell it off. Ended up with a broad rally. S&P, as I said, regained the 50-day moving average, 82% up day. Why is that important? If you get back-to-back 80% up days, so we'll be looking at what happens on Monday, it is a very powerful bullish signal. So that's something we'll be following up on when next week comes. So here are the final numbers. Our 21 over 21 list, 14 up, 5 down, 2 neutral, up an average of 0.96%. The big eight, up an average of 0.75%, led by Meta. RG8, this is our 8 growth ETF composite. All 8 positive today, up an average of 1.55%. S&P 500 up 1.1, equal weight. Continues to outperform the market cap weighted. Today up by 1.43%. Nasdaq 100 up 1%, equal weight 9/10. Dow up 1.6, mid caps 1.6, Russell 2000 1.7. Global diversified 60/40 stock and bond up 0.85%. Our flagship portfolio, GROTECTION, up 0.88%. Added a single individual stock holding back. Well, we still have NVIDIA, but it's mostly hedged. But we added now to the portfolio. We'll take a look at that chart and talk about that. Let's get into it. We'll start off here with the S&P 500. And I'm also going to bring up in the upper corner here the weekly chart for reference purposes. So here's the S&P gapped up. Let's take a look at a 5-minute chart here. Gapped up and choppy around 10 o'clock after the consumer sentiment came out. It was kind of mixed. But then the rally resumed late morning into early afternoon before a big down candle at 135. No explanation on that. Algos, I suppose. Sideways for a little while and then some chop into the close. So not the best close in the afternoon, but it did hold up. Tried to sell it off a couple times. We held above this 54.50 level And that was good news for the day. 60-minute chart. Let's take a look at this. So this 5450-ish level was key back last month. Well, we were chopping around inside of it before the breakout. Yesterday we broke below it, or earlier this week we broke below it. We broke below it again yesterday into the close. Got back above it, tested it into the close, and held. So that is a pretty key area. It's like basically 54.45 to 55.50. We want to hold resistance on the upside 5,500 on the S&P 500, and the declining 21-day moving average, if we go back to a daily chart, is coming right into that 5,500 level. So next week, we're going to be pinched between the declining 21 and the rising 50-day moving average. So look for the bulls or the bears to take charge there. Maybe one takes charge and gets faked out and it goes the other way. We're always aware of from failed moves come fast moves in the opposite direction. You see that all the time. So there's the S&P 500. Let's go to the NASDAQ 100, formerly the strongest, now the weakest of the indexes. All you got to do is look here at the relative strength line and where we are relative to the moving averages. The slope is still up on the 50-day moving average, but an inside day today after two brutal down days. That means translates into a weak bounce. We're going to take a look at the chart of all the Magnificent Seven, Magnificent Eight, Fang Plus 10 toward the end of this video, but this is where we're looking for some stabilization and really for it to stop going down. Thursday's lows playing a critical role in what the big cap indexes, namely the S&P and the NASDAQ 100, are going to do going forward. The Dow is more a large cap value index. Speaking of the Dow, let's take a look at that, regaining the 40,000 level after two tests of the 21-day. Nice day today, showing some relative strength, up 1.6%. The S&P 400 mid cap making a higher high relative to the last 5 days, holding the 21 and the 3,000 level on a pullback. And look at that relative strength line after relative weakness for about 2+ months, getting it all back fairly quickly. And then the Russell 2000, here's our leader right now, trying to bust out of this 8-day range that we're in here. We sold some of this on strength last week and bought it back today, just a little bit below where we got out. Sold it when it was just too extended. It was an offensive sell. We did a trade in here for on TNA for a small loss, but UWM is what we picked. It's 2 times, not the 3 times. The 3 times really can move quickly. We size it appropriately, but the relative strength line is telling a fantastic story here. And this consolidation, looking for it to resolve one way or another, is what we're looking at. Let's go to the equal weight indexes. RSP looks fine, broke out, normal pullback, back to the pivot. This is the equal weight S&P 500 showing fantastic strength for 2+ weeks now against the market cap weighted S&P 500. Equal weight NASDAQ, not as much. You can see it's trended lower for a while, underperforming the S&P because the big caps making up the majority of the weight there. But this chart looks bad, and the relative strength line bad as well, below the 50-day moving average. Let's switch over now to some of our inter-asset correlation. We'll start with the VIX. Big down day for the VIX today. We want to see more of this. We want to see it back below this 16 level. This is where the indexes have done their best work since November. You can see back here November how much time we spent above this 16 level. Got back below it, a couple of spikes recently, as well as back in April. Want to see this move back down. We've recently seen the intraday range on average, the ATR, the S&P 500 spike from 0.75 up near 1%. It's hard to believe, but it was as high as 2.5% during the bear market in late 2022, the end of the third quarter 2022. Seeing a 2% day yesterday and that being the norm, it's hard to relate to it in real time that was an everyday occurrence back then in 2022, but we knew we were in a bear market and also knew enough to stay out of the way. Let's move on to the dollar. US dollar, tight range here, below moving averages. There's some speculation that there's issues with the carry trade going on. A strong yen will cause a pullback in the dollar. We did see this pullback in the dollar that corresponded with some strength in the market. And then when the dollar started getting stronger, this corresponded with with a move in the yen that was in sync. But we're watching this range for the dollar as well. How about precious metals? Gold gap up today and held the gap right into the basically flat 21-day moving average. GDX also up. It ran into the declining 21-day moving average. And silver continues to underperform down near the bottom of the range. Bitcoin, the story of the day. Big gap up after a weak day yesterday, but it bounced right at the 21 where we wanted it to, up 5.3%. Big Bitcoin conference going on out in Las Vegas right now. And Trump will be speaking tomorrow. Michael Saylor spoke today. He is a massive Bitcoin bull, the CEO of MSTR, who's got a ton of Bitcoin on their balance sheet. Nobody even talks about their software business. But you can see Bitcoin now toward the top of this 2-week range that we've been in. Over to bonds, broad bond index broke this declining tops trend line. Price up means yield down. So there's the broad bond index TLT, the long bond also breaking a downtrend line, not as decisively, but let's take a look at the yield now. You can see the yield lower. There's kind of the breaking the uptrend on there, and TNX, the 10-year, same situation. So pulling back, the yield pulling back as price gets higher. That's our inter-asset correlation. Let's get to the tail of the tape. We've got mixed stochastics on the indexes, the RG8. These were all red 2 days ago. So we want to see how this resolved next week. As I said, it really is a bifurcated market. Big move down on the VIX, 11%, as I mentioned. A little bit of news, PCE monthly inflation data was basically in line. University of Michigan sentiment, some basically in line, no surprises, some higher, some lower of the data that came out. The keys that we were watching today, the S&P 500 against the 50-day, it regained it, so that's positive. Did the NASDAQ 100 stabilize? Well, the range was smaller and it was an inside day, so we'll go with a yes on that. And then mid, small, and equal weight continuing to show relative strength. Yes, indeed, they are. These three keys we'll take a look at next week for Monday, as well as is the VIX going to continue to pull back? And are we going to have an 80% up day? Let me add that while I'm thinking about it. So day count from down 2 to up 1. Expectations neutral, regaining the 50-day on the S&P. The rubber's going to meet the road next week. And really expectations neutral because of the broad strength in RSP. Not something we normally factored in to this, but the more I thought about it, my expectations really aren't negative. They will be if we break below the Thursday's lows, but for now, more neutral. Sectors, 11 out of 11 spider sectors higher, led by home builders, ITB, and semiconductors on a bounce. To the downside, the dollar and crude oil, the only significant down sectors. In-house, bought ServiceNow. We'll talk about that in a minute, and also added back UWM. Talked about the keys that we'll be looking at for Monday, but the bottom line for today, broad rally led by small, mid caps, and large cap value. S&P 500 regains the 50-day moving average, so a good sign there. Let's go to, I'm not going to show the 21 over 21 list. There are about 6 or 7 names coming off of it that broke the 21-day, but let's go to some of the key tickers that we watch, namely the Magnificent Seven or Big Ten, and then the RG8 will show. And I also want to turn stochastics on for this. I talked about how they're mixed, and I'll comment on what basically the stochastic index is: a 14-period look back momentum indicator. And when when things stop going up, first the momentum slows and then it rolls over. And if the rolled over momentum continues lower, you'll see the stochastic rollover. There's a above 80 is oversold, below 20. I'm sorry, above 80 is overbought, below 20 is oversold. You can see on individual names, they kind of spend some significant time, weeks at a time, either oversold or overbought, but not as much so on the indexes. And I'll point that out as we progress through the video. We've also got the weekly chart up here so you can see how everything did for the week. Apple, basically all of these charts are going to look weak, these Magnificent Seven, and we'll just go through them. There's Apple below the 21, but above the 50. Amazon oversold below the 21 and the 50, but bounced at the 150-day moving average today or this week. As this has really been tight for 3 months, and that's allowing the 200-day and the 150-day to catch up to price. Microsoft, tough week, down 2.71%, also bounced at the 30-week. That's the purple line over here, the 30-week, below the 21 and the 50. Meta, nice day today, but also below the 21 and the 50, under the 30-week, almost touched the 200-day moving average. NVIDIA has broken the 50-day moving average, 3 closes below there, 21 declining, still holding the 20-week moving average as this was the big leader. Google really coming apart, heavy selling since its earnings report, down below the 20-week moving average. And another one where the stochastic is oversold. Netflix also oversold, just trending slightly lower. Again, negative volume patterns on these big names at the 20-week moving average. And finally, Tesla gapped down on its earnings. 3 ugly weekly bars there, down 8% on the week. And all the stochastics are coming to oversold on these. The other two that make up the FANG Plus Index, which is FNGS, something we monitor. Broadcom also breaking the 21 and the 50, and Snowflake, an extreme laggard. I'm kind of waiting for the keepers of this index to punt this out and put another ticker in here. They did punt out AMD and replace it with Broadcom a few months back. But Snowflake not looking good. Okay, the RG8 now. And one of the things we want to focus on is the stochastic here starting to turn up and get back above the moving average. The stochastic line is the black line. The moving average is the blue line. So we're going to look at the weekly charts of this. That's an extremely nice looking chart with the breakout, and it is in sync with what's going on in the small cap universe and small cap growth in particular, as these are the growth indexes, up 3% on the week. Very nice consolidation here for about 2 weeks since its breakout. SLYG, this is the S&P 600 small cap. These are better balance sheet companies, also tight for the last couple of weeks, up 3% on the week. Great looking weekly chart, positive stochastic. MDYG, stochastic just hooked up again, consolidating at the top of its base, up 1.5%, bounced at the 10-week and 20-week moving average. QQQJ, weak, in line with the NASDAQ 100. It's very heavily weighted to tech. You can see it's approaching oversold, only up 0.5% on the week. PDP, this is a momentum index. These momentum names, growth names, not doing well. It's down to approaching oversold. High beta, also approaching oversold. Weak chart dominated by big tech. FFTY, leading stocks. This is the IBD 50 ETF, bounced at the 200-day moving average, down 1.2% on the week, also approaching oversold. And ARK-K headed lower, consolidating tightly on the daily, down 1.82% on the week. So that's the RG8, a little bit of a mixed bag with ARK-K and FFTY being weaker, and the mid and small cap growth more to the upside. Here's FNGS. This is the Big 10, the FANG Plus Index. It's those 10 big stocks equally weighted. MAGS is just the Magnificent Seven. I'm not sure if that's equally weighted or if it's market cap weighted, but you can see that looks very much like the NASDAQ 100. In other words, not good at all. These broader indexes, once they get down to oversold, they tend not to stay there for as long a period of time as an individual name does, since they're a collection of stocks. Equal weighted NASDAQ, equal weighted S&P. Now let's look at the stochastics on the indexes. Where when oversold, uh, you look for the if first of all, if it's a stop going down, then the hook back up the moving average line, and then you want to see it cross back above the 20 level. There's no guarantee, but you can see how this tends to trend once the change in trend takes hold. It could chop. It's very possible that it will chop, but this is just, and this is a secondary indicator for these that we use, knowing that if you're looking to get back into something and you want higher prices, you're more likely to get them if you come down to oversold and start coming off, because the downward momentum, as I said, will stop and then it'll curve higher, just the same way that the positive momentum wanes before it rolls over. So we use these in-house on various time frames quite a bit. NASDAQ 100 already an oversold, slight hook up trying to take place there. And again, 2 weeks is normally about as long as it hangs beneath here before it comes off and some sort of a rally takes place. But we're always looking for the trigger, the setup we don't anticipate. Here's the Dow didn't reach oversold, which is good because it's been dominating and it's a large cap value, which is in favor. So you can see it hooked up, didn't cross the moving average yet, but it didn't wait to get down to oversold before it hooked higher. Mid caps headed down for a while, but now again, being the strong index with relative strength, has crossed back over, and we'll see if this can continue to the upside next week. Same thing with IWM, small caps, it's staying overbought. It poked its head just below overbought, now headed back up there again, and this is the leading index. Look at how the volume patterns just changed on a dime with that CPI report of Thursday 2 weeks ago. That is really everything of note that I want to show for this. I will show service now for why we bought it. And really, this is just a classic CanSlim stock. Great growth numbers, consistent earnings growth. Just reported a very nice quarter, gapped up out of this long flat base, 113 days, 22% length, really a very nice base on volume. And now we want to see, is this a canary in a coal mine? Is this breakout going to hold? It's a very low risk entry point for us. We took a 3% position in it today in GROTECTION. You can see the stochastic cross on the daily, and very nice weekly chart, big volume on the weekly as well, up 10% on the week. And this is us dipping our toes in the water in a very favorable risk reward situation. Two other big names that are really large cap value stocks. Here's IBM. Let me take stochastic off to get a better look here. Here's a cup and handle for IBM breaking out. Not a traditional CanSlim stock, as these are not growth numbers that we're looking for from the traditional CanSlim method, but this is the type of name that is coming into favor. Keeping an eye on this breakout as well, not likely to buy it, however. And also GE, which had a very nice run. We're going to say, is GE not a traditional CanSlim name? Well, it is if you reckon back to what going from 2022 into 2023 and 2024, how the earnings growth reaccelerated, and that sparked this uptrend. This is really one we just flat out missed because we had a bias against the fact that it was GE, but it went on a fantastic run, then formed another base, tried to break out 4 days ago on earnings on above average volume, lower volume pullback into the base, bouncing at the 50, 21, and 8-day moving average confluence here and headed back up again. This is one that we'll consider for the portfolio with the nice earnings growth there. It's not, doesn't have a ridiculous valuation with a PE of 41. One thing we really don't like is the sales growth only being at 4%. That's a sales growth deceleration. But the CEO came in, really had two major spinoffs, sold off a bunch of units that weren't doing well, and this is another possibility for the portfolio. GEV is one of the spinoffs. That's an alternative energy. It regained the 21, and GE Healthcare is one of the other spinoffs. That's been tight for a while above its moving averages. So GE alive and well, flashback 25 years to the last time it really was. That's going to wrap it for the week. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. And as always, it's not how much you make in the market, it's how much you can keep. Our flagship portfolio is named GROTECTION because it's designed to grow assets during uptrends. Pull back the tap on the brakes if things start to slow down or go sideways or break moving averages the way we did here. We dodged the 2022 bull market, as sometimes these pullbacks are mild, sometimes they turn into a three waves down that can break the 200-day moving average. And this is where all bear markets occur. This is when we get to maximum defensiveness. Right now, we're defensive only with individual names. We still maintain our beta above 0.6, 0.7. We're actually at 0.87 right now with the now buy. And that's because the indexes, will bounce around. We're in small caps and equal weight, and those are helping the bottom line. And that's it. Give us a shout if you're interested in learning more. And with that, I'll wrap it for the week ending Friday, July 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.